Happy Market Talk Monday, everyone. Herman here, your Austin real estate go-to expert. Now, I'm here to bring you all the latest numbers, the trends, and a clear snapshot of where our market is heading. So if you're still wondering what market we're in or where the hot neighborhoods are, this update is for you. Let's start with the pricing, because the average home value in Austin right now is about $523,000, down roughly about 6.5% from last year. And the median listing price sits at around just under $600,000, which is about 6.4% lower than last June. But here's the twist. The median sold price for single-family homes in July actually ticked up a bit to about 1.4% year over year to just over $623,000. So what exactly does that mean? Because it's a bit of a tug and war between list price and sell price. So sellers are coming to the market more competitively, but well-positioned homes are still commanding strong numbers. So the focal point of this episode is the inventory, right? This is the big story, because we've got just over 5,900 active listings, up 17.7% from this time last year. And we're sitting at about just over 5.5 months of inventory, which is just over a month and a half higher than last July. So homes are taking longer to sell, and we've seen that, right? That's been the case this year. Median days on the market are stretching into the 50, 60 day, 70 day range for many areas as well. So what this means is buyers have more breathing room, and they're not rushing into bidding wars the way they were a couple of years ago. And for sellers, this is important because pricing right and presenting truly matters, right? So those trying to sell top dollar in this market, you're not going to command what you did a few years ago. So you do have to have those clear expectations. In July, we saw about 979 homes sold, which is actually 12.9% increase, year over year. But pending sales came down slightly for the year overall. So what does that tell me? Summer buyers were active, but heading into the fourth quarter, we're starting to see it pull down a bit, right? So it's going to slow down unless interest rates shift. And if you're keeping up with the Fed, Jerome Powell kept them where they were. I will be releasing another video about that because I do believe they will fall sooner than later. There's actually been predictions of 4 future drops, but anyways, we'll save that for another video. Now, the quick luxury snapshot. Homes over 1.4 million have a median sold price of about 1.9 million in July. The inventory is at about 752 properties, and a median of days on market, DOM, is about 58 days. Now that's double last year, but off-market luxury sales are still huge, over 1.1 billion in private listings circulated outside the MLS. Translation: if you're buying or selling in the luxury space, networking matters as much as online visibility. So who you know truly matters to really get your listing out in front of the right person. Let's focus on the hot spots. Mueller is still one of the most sought after master plan communities thanks to its walkability and amenities. You also have Circle C Ranch. It remains popular with families for its schools, greenbelt access, and community pools. East Austin continues to attract younger buyers looking for modern builds and proximity to downtown. Interestingly, neighborhoods just outside the city, like Pflugerville, Buda, and Cayo, are seeing steady activity because buyers are willing to trade a little bit of that commute time for bigger spaces and slightly better affordability. So as the migration and demand trends shift, Austin is still a net in migration city, and to no surprise, right? We're seeing incoming buyers from California, New York, Chicago, you name it. But at a slower pace than what it was in 2021 and 2022. That surge was just absurd. Many are still remote workers looking for lifestyle upgrades, and they're eyeing properties with home offices, larger yards, casitas, multi-generational layouts. But to tie that all in, right, that's all tied into the mortgage rates and the affordability, because rates are holding in the mid-sixes for well-qualified buyers. That's keeping some sellers locked in their 3% mortgages, which limits certain segments of inventory. But on the flip side, motivated sellers, especially those relocating or upgrading, are more open to concessions like rate buydowns and closing cost credits. If rates dip closer to 6% or under, expect a short-term bump in buyer activity this fall. So now kind of stepping back and getting a bigger picture, right? More of a seasonal outlook. Heading into fall, we usually see a slowdown in activity as families settle into the school year. And this year will be no different, right? That slowdown will be mild because inventory is higher than it has been in the past years. And motivated buyers will take advantage of less competition. So if you're buying, the next 90 days might be your window before spring demand comes roaring back. Just get ahead of the curve, right? Like I've always said, if you have the means to buy, this is your time. So where are we now? Because Austin's market is cooling, and we've seen that, we know that, but it's not collapsing, guys. Buyers are still getting options, and sellers need strategy. It is simple. Neighborhoods with strong amenities, like I've mentioned, right? Schools like Circle C, Allendale, Mueller, they're all still gaining that attraction a little bit higher than the average. So if you want what these numbers mean for your situation, whether that's timing a purchase or maximizing your sale, reach out. I'm here to help you navigate Austin's market with confidence. Thank you for joining me for Market Talk Monday. I'll see you next week with more insight into what's shaping our city's housing scene.